Many traders often jump from one method to another in the quest for what perfect trading systems that will bring a consistent result over the long term given various market conditions and cycles. What most traders fail to realize is that the answer doesn't always lie in the new systems. Rather, systematic and incremental modifications to their current system is order to make them suit their trading system's level of the experience and personality. But instead of working to improve their existing systems, these traders will often drop the entire strategy and deliberately adopt different trading systems that they think will work better. So, what if you find yourself trading strategy that may no longer be compatible with the market? Will you alter the strategy, and if so, how would you go about it? So in this video we will talk a few tips how on fixing your strategies in the matter that smooth and methodical. Step 1. Evaluate current performance of your trading strategy with past results. The first important step is to carefully evaluate the need for such change. Do you have enough sample data, maintain enough trades to assess its performance against its historical stats? Many traders impact impatience with the strategy poor performance fail to give the systems enough time to show it the true colors, whatever favorable or unfavorable, either way you must give it time. If a system is truly versatile, it will consider a nuisance of the changing market conditions. So, if temporary market conditions make a system perform poorly, then perhaps the system's poor performance may be expected or built into the design. You have to be a realist. There is no system that can perform optimally 100% of the time. So it's important to have the patience to give your strategy the amount of the time necessary for the sound evaluations. The last thing you want is to change systems often, in which case you are likely to catch the drawdowns of the even profitable systems. Once you have enough sample data, which will vary from systems to systems depending on its performance stats, you can then compare its performance with the past results. So, how to evaluate current performance of your trading strategy with the past results? If the strategy falls within the range of the past performance, meaning it doesn't exceed the worst historical drawdown, its average wins and losses are within the range of the past results, profits and losses seems similar, and its profit effects and with rate are comparable, then there may be nothing to alter. If the system bears no resemblance to the past results, then it may need to be altered or changed completely. The main point there is the objective, and don't abandon the strategy after a simple losing stick. Step 2. Validate your trade triggers, entries, management, and exits. If your system's performance no longer matches to the historical stats upon which you based your decisions to trade it, then it's time for the alternations. But you need to determine the level of the alternative, slight tweak, and additional of the subtraction of the indicators, shift in the time frame, a change in trade management, recombinations of the risks perhaps, or several complete overhauls which especially change the entire systems. Another way to view is to ask yourself the question: does your systems need the alternation on a small large scale, or it is undergoing what some traders call the systems death, where it is just no longer has any variability to correct condition? This is where you may need to take your systems apart piece by piece. Perhaps an indicator is no longer serves its role, or perhaps its including into the systems was fully to begin with. Perhaps certain aspects of the systems have become weak, or perhaps its technical foundation was already weak from the get to. Talking to a systems a part of the evaluation its parts in no easy task. It can be very tricky and hard. And ultimately, it may rest upon your level of the knowledge and experience regarding techniques, indicators, and the system evaluation. This is the most important steps. Ask yourself these questions: do you believe a part of the reasons for your inconsistency in the trading has to go with their high frequency of the trade steps that your systems generate? Would you attribute it to the time frame that you are perhaps applying the systems to, or a weak or too aggressive entry certains that allows you to stop similarly good steps everywhere? Do you believe you are maintain your trades too high, focusing you out of the market permanently? Is your systems really on the ability to predefine exists rather than the market prices and price actions? Are your exit decisions affect on your profit and loss balance? These steps involves being brutally honest about the personal experience with the trading systems and going over the day-to-day trading decisions as a result of the systems. If you end up particularly building a completely new trading systems, be aware of the such tasks may require consistently more time and effort as comparable with the market minor alternations. The result won't come overnight. It may take weeks, months, or determine whatever a system needs to the complete overhaul. So be ready to use a lot of the resource in terms of the time, patience, and eventually when you go live capital. So successfully accomplish this step, you have to pinpoint the strengths and the weakness of the each system's component, making the alternatives of the certain components and observing its potential effect to the other components and the tower to the system overall. Step 3. Make the adjustments and test to the live market. You start by the tweaking entry central. Perhaps you should no longer be looking for the pain bars as entry point only around the numbers, and also the circle support and resistance level. Maybe you should be replacing your arbitrary pre-different exits, whether you do the big stop to the bottoms with other what are the plans indirectly for the each trade, or ditch the indicator confirm which at the deadly factor of your entry. These are just the simple examples. You can filter trades based on your strategy. The trick is to not introduce the major over results to the trading systems, but making a little periodic adjustments that improves your trading systems. Then you will need to test the system in a live evaluation. Prior to the steps is the important test to the system. The simulations model at first, but do not proud the demo testing phase. Again, the real market is where you find or you don't find the real results. I said before, will take time, patience, and the capital. Most importantly, observe the system's performance stats as you run through the various iterations of the changes and improvements. Otherwise, you won't be able to objective the completely evaluating the effective of your system's tweaks. Step 4. Periodic evaluations. Make periodic evaluations in the perfect world, and the change you made should yield better trading results. However, the reality is we trade in perfect markets. The change the ability may not yet desired results. The only way to know for sure is to objective track your performance under the renewed trading conditions. So keep track on the traders taken under the new trading results and match these new results with the past results from the original systems. If the process was undertaken the right way, you should see the improvements of your trading results. So if you do not, or worse still, the latest results appearance more inequitable, you may need to revisit some of the earlier steps and redo them into a little different way, and then repeat the testing phase again. Generating a large enough sample size is very important, as the sample size is too small can easily mislead for you and to the overall effect of your changes. So give your systems time to prove itself. One of the things you should keep in mind as the market change, the truly good strategy will be adjust the new market conditions, while the bad strategy might continue to run when it's not appropriate. For example, markets may suddenly become the quiet for several days in a row, and you need to understand how to trade this. Because of this, some traders may have the couple different systems, so you should recognize that it's important to use the right systems in the right scenario. Remember that systems are like tools. In other words, you should be able to apply the correct tools for the correct jobs, and forgot about finding the perfect trading strategy. Such a thing doesn't exist. It depends on you and how you often adjust it to work for you. Trading strategy should regardless route your trading actions. Keep this in mind that creating your trading strategy, also your strategy should be easy, clear and simple. Remind it often the essence how it's doing, and if your trading strategy doesn't work for you, don't be ashamed to change it. As always, if you learned something new and found value, leave us the like to show your support, subscribe to our channel and hit the bell icon to stay notified when we upload the new video. Until next time.